Hey, what's going on, guys? This is TerrenceRe, and I'm back at you with another stock market update. Right now, we're showing that the S&P 500 is up about 37 bucks on the day. Let me see if I can pull up the S&P futures. Yeah, 37 handles. So it's almost up a whole percent. We got the NASDAQ futures up about 3/4%. The Dow futures are up a whole percent. Russell futures are up almost 1.5%. So as usual, the Russell is leading the way. Uh, right here, I got a screenshot or showing on a chart of the SPX. Now you see my weekly expected move, which I always do for the week. We are right up against it. I mean, like touching, like I'm gonna zoom in. We are right on it, and you can see it's starting to wick on the day. So it would not surprise me if we got a sell off toward the end of today, and or it just wicked a little bit right here because that is the expected move for the week. So we've already touched that, and that will mark, or sometimes it'll play as resistance for the market, right? If you're new to the channel and you say, "What is he talking about? This expected move?" That's where I come to the option tab and I go out. So maybe like on Saturday or Sunday, I'll go to the next Friday on the option chain. So basically, next Friday would be what? Today is the 14th. So tomorrow is the 15th. So next Friday would be what? The 22nd. So I'd be looking at the expected move for the 22nd for next week. And I would just take this amount right here. Or if you just look at the option chain and I put those lines right here and right here. And that serves as support and resistance for the week. All right. So if you're looking at the title of this video, I named it "When Do You Have Edge?" And so there are a couple of ways I'm going to apply this to trading, and we're going to use um, a real life example today. Right now, the auto workers are threatening to strike tonight at midnight. And I'm gonna pull up those stocks. We're gonna take a look at them. I got them. I got some little stuff marked out on the chart. But when do you have the edge, right? So there are a couple of ways depending on your trading style. Some traders, now I use a little bit of everything, right? My trading styles are like kind of like Bruce Lee, right? JKD. He took a little bit of like boxing, and that's why he was never in a traditional style. You see Bruce Lee moving around the ring, he liked the rear kick, like the roundhouse kick from the Muay Thai fighters. He would use the jab from the boxers, and he had boxing footwork. You know, kind of that's my trading style. I use a little technical analysis. I like to use some quant stuff and come look at expected move. I like to use deltas and probabilities in my trading. And I kind of like to see them match up, right? For like a confluence of things. And then I'll make a trade, right? So when do you have edge in the market and in life? So right now, when we look at what's going on with the auto workers, right? Ford, let's go to my stock market update watch list. So you got General Motors, Ford, and Stellantis, which I think is like the parent company of Chrysler. They're threatening to strike. And you say, well, how does this equate to when you have edge? Well, the workers have the edge right now in reference to this deal. I personally think the deal will get done quickly. Right now, the a lot of companies are working towards automating many of their practices, or they're trying to use AI. And if you're not paying attention, you're gonna see robots in every factory doing things. It's gonna be You're not gonna have to do as much maintenance or line work. They're streamlining a lot of the processes, and they're engineering problems out, and they're tightening up the process. So right now, workers really have to go hard to get what they want. So they have the edge. They have the leverage at this point. So they're going to the table to negotiate just because they have the leverage. You don't negotiate like in business, you negotiate because you can. When you have the leverage, you go to the table. Just think about it. If you've ever tried to take out a loan or borrow money, when can you borrow money or when can you take out a loan? It's best to go get the money when you don't even need it and you hold it until you do need it. Think about it. If you got good credit, that means you've been paying your bills on time. If you got bad credit, what? You haven't been paying your bills on time. Most of the time when you need to borrow money is because things are tight. When you might be missing bills or being behind on things. Most of the time people don't borrow money when they people borrow money when they need it. And when do you want to give people money to somebody? If you're smart, you give it to them when they don't need it cuz you know they can pay you back. That's why a lot of times you see people go and do things when they have good credit. They keep their cash and use other people's money to leverage and get things done. You see a football player or a basketball player or someone in us and that we see on TV in a sport, we see them have a great season and then go hold out and go back to the table. Why? Because they outperformed their contract. So their stock is high. So they take the owners back to the negotiating table. If they wait to the wait, when do you think it's good to have go negotiate? When you have a bad season or when you have a great season? So it only makes sense that the auto workers go now to try to get because the companies they've come out of the pandemic and from they've recovered fully. They're back making money. They're profitable. Now is the time for them to go back to the table and go and negotiate and try to get pensions back and try to get to go along with their 401ks. And you may say, well, what does this have to deal or have to do with trading in the markets, right? Because in the markets, when do you want to trade? You want to trade, you want to try to put edge, you want to try to put certain factors in the market on your side. You stack them up, and then that's when you use a confluence of things in your favor to go make a trade. Generally call that. Now, I thought about making the title of the video this, but I didn't want to I didn't know if it would get flagged for the term shooting from strength, right? Obviously, I'm not talking about violence. I'm talking about pulling the trigger on a trade or going at something from a position of strength. That's the same as negotiating when you have the power to do so. Trading at extremes is shooting from strength. A lot of times when you see a market like fully extended, or we could see volatility fully extended, when we want to sell premium, volatility has expanded to extremes, and we measure that by IV rank or price action. So we may see price action. That's what I have on the screen. I have a full stochastic, and with my stochastic, when it gets to where it's oversold or overbought, then I start to look at going to the opposite direction. I'm stacking things in my favor and then going against the grain. So I'm trying to make trades when I think I have edge, right? So when you're negotiating, if you're negotiating with a good negotiator, they're not going to let you know that you have things in your favor, but you just got to kind of know. So I'm going to bring up the chart of GM first, then we'll look at Ford, and then we'll look at Stellantis. In GM, we have a possible bull flag setting up. Doesn't mean we're going to get it, but we got it setting up. And because I got a possible low where I got a hammer candle right here. So let me take take the drawings off. Right here, I got a hammer candle. That's a hammer candlestick. And then we got a up day, up, up, up. Now this was a red candle, but you can see it made a higher high on the day. And this high took out this high, and now we got the candlestick right here with a long wick. Now, if this wick can hold like this, now they are threatening to strike tonight at midnight. They're going to strike certain plants. I believe that this is already priced into the market. Just looking at the option chain, if I'm looking at the 1 day, now it says that the IVX is like 71%, right? But it's only a 78% expected move. Excuse me, 78 cent expected move, plus or minus. So we trading at 33.52. So they got 78 cent isn't a whole lot, which leads me to believe, in my opinion, that it's already priced in. Like all of this is to do about nothing. I think we'll get a deal if they do strike tonight. I think we'll get a deal, maybe tomorrow and over the weekend. I don't think it'll go on long. I think the car manufacturers will, car companies will. I think that they will come to the table and give in, because I do believe that the workers at this point have the leverage to do what they're doing. So I believe that they'll give in, which is why I believe that UPS gave in, and a lot of these other companies will give in, because I believe that the workers have the leverage at this point. So with the market being, just looking at this visually, you can see that this stock has been beaten down. Let's go out, let's do a whole year. So we're gonna go a year from today all the way back to September last year. Stock just been going in a range. So this is the range of this stock, right? You can just see right around what, $43, and then you got a low of $31. So anywhere between 31 and 43 is GM's little range over the past year. And you can see right now we're down at the bottom of that range, and it looks like we have a double bottom right here. So it would not surprise me to see the market push up. What would be the catalyst for pushing this market up? Them striking some kind of deal. So I think that the deal will get done, and I think the workers will get, for the most part, what they want out of the deal. Same thing. We're gonna pull up forward, and you're gonna see you got the same type of setup that's working on forward. As soon as we get it to pull up, see right here, same scenario. We already got the low, the high, the low, and the higher high on forward, and we got a pull back right here into support. So we could get a break higher. Well, if we go to the option chain, we only got a 28 cent expected move for today. And check this out. If you look at the implied volatility of 77% for the 15th, which is Friday, look what it is for next Friday. See how it drops off? That's because it's already in my opinion, they're showing you on the option chain, when you see the vol drop off to the next week, that means that the volatility will subside in the options market on this stock. So, which leads me to believe they won't. If they strike, it won't be long. It's already factored. It's already into the price of the stock. The market is already telling you basically what's going to happen. Now, every now and then you get some surprises, right? It could happen, and this could shoot back up. I don't see it. I see it. I see just what you see. Implied volatility dropping off to by next Friday. So if I had to make a bet, the strike will last, if they strike at all, maybe a week, and we'll get a deal by next Friday. And this stock may go up a couple, maybe $1 or two. Hit some resistance up here at 360. Excuse me, 1360. And then you got a gap right here on forward. So I would say I would be looking at some type of resistance right in this area. It's already baked into the market, in my opinion, what's going to happen. Let's take a look at Stellantis. Stellantis stock, I believe, looks a little better, right? You can see almost, you got a nice little slope to the upside on Stellantis, right? You see it moving up. So we had actually got a nice uptrend on Stellantis. So let's see what happens if we get another big move. They get a deal made and it gets up into here. Let's look and see what the expected move is. So even for Stellantis, you see the IV over here is 80% and it drops off. Now they don't have weeklies in Stellantis. They got monthlies, but from one month to the next month, it drops off 50. And you don't have a real big expected move. I do want to talk about Netflix before I get out of here. Netflix, I have Netflix taking this low out. We got a low right here. I want to be right and exact. We have a low in Netflix of $398.15. Currently trading at 401.63 and dropping fast. It's down 2.5% on the day. I see it taking this low out. Once it takes this low out, look out below. We got some support right here. We got a gap. If you guys know, I like gaps to serve as support. So let's see what happens. If it gets down here and takes this low out, I think we'll get a little pause right here and maybe even get us a pullback. But once we get that pullback, will it, is it time to sell again? Not quite sure. Now, the thing about Netflix is IV rank is super low. That's what's eerie about a sell-off like this. Generally, you get a big sell-off, vol is supposed to increase. But vol, let's look at it. The IV rank is low. The IV is expanding, but not expanding at the rate that we would like to see it in order to be trying to sell premium. But I would like to see it take this low out, and then when you get somewhere here, it'll probably try to form some type of bottom. We're not quite oversold on the stochastic yet. So we're looking at it right here. We still got room to go before it gets oversold on the stochastic. But once it gets down around here on the stochastic, could maybe in a trade. I don't know if I would want to catch the falling knife, but selling a put or something like that coming out, maybe I stay away from earnings. Coming out maybe 380, the 25 delta or the 29 delta, and selling a put right at 380. Or you could sell the expected move. Expected move, sell the 21 delta right at the 375 strike. Sell that. Where's 375? That's going to put you like right in here. That's actually on the other side of the gap. I like that to hold for a nice support level. Give you a pop up, give you a little bounce up into here, and then you'll be able to close that trade and get out. So if you don't know, selling a put is a way to get bullish in a trade. And you say, why would you sell a put while it's going down? Shooting from strength. Market's coming down. It's going to be overextended. It'll be oversold. Why would you want to sell after 3-4 days, straight days of sell-offs? At some point, you're going to get a pullback. You don't need much of a pullback to make profit on that trade. So even if you don't sell a put, you may want to drop down to a lower time frame, right? See how it looks on the hourly, like it's chopping? You might want to come down to a lower time frame, and then this is an hourly. You could drop down to like a 5-minute and then try to get a pop, back up into this level right here, right around 416 for a scalp, during the day, maybe a quick trade. Maybe if not a day, you may hold it for a day or 2, 3 days, tops. If you want to trade counter trend. So hey guys, hopefully you got something out of this video, and I got my point across about shooting from strength, when to negotiate, and basically applying these principles to the market and making some trades and trying to put things in your favor when you're making those trades, when you're negotiating with the market on what trade you want to put in. Hey guys, hit that like button, hit the subscribe button, and then let me know what you think about the video. Let me know what stocks you're trading. Let me know what you think. Give me a stock, and I'll mark it up and put a chart, and even give you a trade or something, a way to trade it, or what I would do, right? And with that, I'm out, guys. Peace.